Another week, another Trading Cycles video. Welcome back to Trading Cycles. We are now on what, week 11 of 2023? Or is it week 12 already?
Week 12 already.
Week
yes,
12
time
already.
flies.
Crazy.
Indeed. Crazy times as well.
Yes. We'll have a look at what happened last week, and then we'll move on to what is going to be happening this upcoming week, or what we predict might be happening this upcoming week. But before we do that, keep in mind, we do not provide financial advice. All the content that we share is intended for educational purposes only, and always trade the price and not the prediction. And I'm handing it off to you, almost now.
That's right, Eric. Thank you. Well, let's see what was happening then during the past week, and obviously it was a crazy time on the market. But I have one thing before I go to the past week's market action. I'd like to mention that I think we have been now forming, or it is about to form, that technical term is head and shoulders, basically.
Like the shampoo.
Yeah, we're not talking about shampoo here. It is just forming like a how you call it now, a formation here. Yeah. So basically that is, by the looks of it, the left shoulder. Yeah. And then we got the head here. Okay. And if that's going to be right, then we should have a right shoulder here forming in the next coming weeks, which is basically around second half of the April or beginning of May, somewhere there. Okay. And if that holds, that's obviously not a good sign, because if I move over to the S&P 500 now, it's basically the same thing here, and there's a slight descending cone here as well, which is now coming together, and if we are right, then the S&P shouldn't exceed that level here, which is around 4100. Yeah. So that should be the market top then during our spring seasonal rally as well, which is not really anything good, to be honest. But it still should be there. Okay. Obviously, I hope that it's not going to happen, and the price will go higher, which would be good if we have a higher top here in the future. But by the looks of it, if it does end up here, then we would end up a lot lower there during the spring and summer months at some point. So if the head and shoulder pattern holds, yeah.
So it looks like it's the market is converging and kind of constricting at the moment to kind of level out at this kind of a point here.
Yeah. So it's not really a good sign, and our cyclical prediction also stated that we might have a top around April or beginning of May. And thereafter we should have a decline on the market. So it's quite serious if it happens. It might end up a lot lower here. So for example, on S&P I have Fibonacci levels here on as well. At the moment we are holding that level here, which is basically 0.382 level. We might end up at 0.5 or even here, which is 3,200 level, yeah, basically on the price side. So that's quite a lot of decline, almost back to 2000 prices here then. So we'll just have to wait and see how it goes. But at the moment, let's get back to the more recent times. And what happened last week was a sort of a banking crisis here, which has scared off quite a lot of people on the market, because lots of unknown is there, and nobody really knows what's going to happen from here on. But the good thing, obviously, is that Fed has now backed up all these deposits in that bank, and basically there are no losses at the moment the depositor side, but obviously the bank itself was the one who suffered the most. So at the moment, by the looks of it, the market seems to be quite calm, and tomorrow is the next Fed decision on the rate hike, so we'll just have to wait and see how it goes. But my prediction for the next week, or this week actually already, is that that the prices will decline on Wednesday, and thereafter it will start to rally. So basically from Thursday on, we should have more rising prices from there on the overall market. Yeah.
Okay.
So, and let's have a look. Obviously, gold has been quite cheerful in that crisis. So money obviously needs to go somewhere.
And people trust gold, so they put money in gold.
So yeah, gold was quite good, and it ended up yesterday just above 2,000 US dollar level now. Yeah, so that's quite
historical
good.
high, isn't it?
Quite
for the while at least.
Yeah, it is. It's been at these heights last time in spring when the war started. Yeah, just after. Yeah, last year. So we'll just have to wait and see. At the moment, it's declining. Possibly tomorrow, it's gonna go up a bit and resume its decline until 29th. That's what our cyclical analysis obviously says. That obviously might not be the truth, but some guides here at least. And Bitcoin has been basically a similar case. People obviously need to put their money somewhere, and it's either gold or digital gold, as they say. So both of them have been enjoying that crisis, so to say. So yeah, we'll see how it goes. Obviously, Bitcoin is in quite good position, and I do expect that it will rise from here on a bit with the general market, alongside with the general market. Yeah. So that's the idea. And obviously the 50-day moving average of the broad market is now in that bottom zone here, which is below 30%. And it's been here for now quite many days. And that's a good sign, obviously, that the market might be turning at some point, and it will go up again. And WIX, which is the fear index, obviously the volatility index, has also now started to decline, which is also what we predicted. At least our cyclical analysis said that it will start declining from here. It was just a sharp rise, and decline will follow. All right. What else? I wanted to bring up one more thing which we haven't discussed here before, but so that's something that CNN Business covers. That's a fear and greed index, which is on a timeline. It's quite cyclical as well, so that's quite good to follow. And at the moment, it's been in its extreme measurements, obviously on that scale here. So obviously last week it was here. And when it gets to that point, it will bounce back as well at some point. So basically that's how it usually goes. So at the moment, that's also indicating that the market might go higher from here.
We'll have this link down in the description as well, so if you're interested, you can check it out yourself and have a look for yourself, and keep this in your arsenal of things to look at.
Of course, yes. All right, so I think we'll just have to now wait and see what's going to happen after the Fed's decision, because we don't know if they're going to raise the interest rates at the same pace, or they're going to slow down now. which obviously market is expecting them to do. I don't think they're gonna stop the rise just yet, but we'll just have to wait and see what is the decision gonna be tomorrow. And we'll continue then in a week's time again. All right.
Thank you very much, and thank you for listening and watching us as always. If you haven't already, click that like button, click the subscribe button, click that bell notification button. Just click all the buttons that you see at the bottom of the video here, just to make sure that you are up to date with all of our uploads. And make sure to share this video, share it on Facebook, Twitter, Instagram, I don't know, TikTok, anywhere that you use any social platform. Share the video over there, and leave a comment with your thoughts and ideas. And if you have any ideas for future videos, do leave those in the comment as well. But yeah, that's it from me. Thank you very much for listening, and have a good one.
Cheers. See you next time.
Bye bye.